Here is something few people realize about ATO audits. Two taxpayers with identical affairs can finish in completely different places. One walks away with a manageable adjustment and penalties remitted. The other faces maximum penalties and enforcement action. The difference is not the facts, it is conduct during the audit. I am Benedict Yoon, tax lawyer at Australian Tax Experts, and after hundreds of ATO matters, I can tell you the same 5 mistakes decide audits again and again. Here they are.
4 numbers frame what follows. 5. The avoidable mistakes we see decide audits. 75%. The penalty rate when your conduct reads as intentional, instead of 25% for an honest error. Same shortfall, triple the penalty. 1. The number of professional teams you need. And 0. The number of new problems to create while the audit runs. Let us take the 5 mistakes in turn.
Mistake 1. Wasting valuable time. It is the quietest mistake and the most common. The audit letter looks routine, so taxpayers underestimate the magnitude and stay hopeful it will sort itself out. They lean on their existing accountant, which feels natural, but here is the structural problem. The returns under review are usually the very returns that advisor prepared. They are part of the story being examined and rarely placed to run a defense. By the time a tax lawyer is engaged, often months in, the ATO's patience has run out, positions have hardened, and the generous early options have expired. Time is the one asset in an audit you can never get back. Spend it deliberately, from day one. Mistake 2, and this is the worst on the list, by a distance. Lying to the ATO, or manipulating the information you give your own advisors. Understand what you are up against. The ATO already holds your bank data, AUSTRAC transfer records, and account information from more than 100 countries. In most audits, it is not asking questions because it lacks answers. It is testing whether you will answer honestly. Get caught out, and everything reprices. 25% penalties become 75. Fraud findings reopen years that were closed, and criminal referral becomes possible. And misleading your own tax professionals is self-sabotage. No strategy built on false facts survives, and credibility, once spent, does not come back. Mistake 3. Handing over everything the ATO requests without independent review. Cooperation matters, but everything you provide becomes the permanent record, frames the issues, and can widen the audit into years that were never in question. Before documents go in, have them reviewed by a highly experienced tax lawyer or specialist accountant, and importantly, not the accountant who prepared the returns. Skip that step, and the matter becomes much harder to reconcile strategically. Once everything is in, unexplained, you have surrendered the narrative, and buying it back is slow, expensive work. Mistake 4 is the opposite instinct, engaging multiple professionals for the same matter. An accountant here, a lawyer there, a second opinion running in parallel. The result is a matter that is tangled and out of control. Inconsistent positions, mixed messages to the ATO, duplicated work, and no one accountable for the outcome. You pay several sets of fees to make your own case weaker. An audit needs one team and one strategy. Legal and accounting expertise on the same file, speaking to the ATO with one voice. Mistake 5. Creating new problems while the audit runs. Selling a major asset mid-audit exposes the proceeds to the ATO's third-party collection powers, and worse, it reads as asset dissipation, inviting protective action. Departing the country suddenly is more dangerous still. It flags flight risk, and the ATO can seek a departure prohibition order that stops you at the border. The same goes for restructures and money movements. Every unexplained change becomes a new question and hardens the ATO's posture. While the matter is on foot, keep your affairs still and clear any necessary transaction with your advisor first. And now the positive counterpart to all 5. Show integrity and good faith throughout, to the ATO and to your own tax lawyer and accountant. ATO officers exercise genuine discretion at a dozen points in every audit: the scope, the characterization of your conduct, the penalties, the settlement terms. They are also human, and a taxpayer who is honest, responsive, and consistent is treated measurably differently from one who is evasive. Audits are rarely won by cleverness. They are won by discipline, early engagement, honest instructions, reviewed cooperation, one team, and no surprises. This is exactly how we run audits at Australian Tax Experts, where tax lawyers and accountants work as one team. We manage the defence end-to-end from the first letter. We review and frame every document before it reaches the ATO, and we negotiate the outcome, penalties remitted, scope contained, and settlements reached with your credibility intact. If an audit letter has arrived, the best move you can make is a phone call before your first response. If you are under an ATO audit or expecting one, talk to Australian tax experts before your next step. The first days shape the outcome. Visit australiantaxexperts.com.au/contact. Thanks for watching, and remember, this presentation is general information only, not personal tax or legal advice.